enter at your own risk.
Hells yeah, I'm gonna mosh tonight. In the last 2.5 decades, the mosh pit has evolved.
I don't know, maybe it's been around forever and we're just now calling it the mosh pit, like in the tribal days where they'd like dance around the fire.
For veteran moshers, there's a set of unspoken rules that governs pit behavior.
About mosh pit etiquette.
That's right, ladies and gentlemen. The Fintech Moshpit is back. This is the news Roundup edition, and we have the top leaders from the Fintech ecosystem here joining us today in the Carolina Fintech Hub's Fintech Moshpit. It's an amazing time for Fintech, both challenging and a lot of opportunity. With us, our key panelists, we've got Aubrey Hawes, the old man from Oracle. We've got Chris Hart from Level. We've got Scott Harkey from Level. We also have members of the Carolina Fintech Hub team, Pasha and Katie. They're with us. And then the producer of the Fintech Moshpit, Brian Adams, playing the role of Joe Rogan's guy who puts up stuff on the screen during the video version. Thank you for being here, Brian. Ladies and gentlemen, I'm going to kick things off. We've got a lot. Most of the time, people don't get to see Pasha's face as part of the mosh pit and the recording. So this is interesting. We've got some great topics today. We're going to talk about Square. We're going to talk about Digital Dollar, Akoya, Plaid, Visa. And really the theme is what with COVID-19, the coronavirus's worldwide impact on literally almost everything. What does that look like in FinTech? What are the things we need to know? And what are the things that we need to understand from you? This is being live streamed. So share your comments. Pasha's role is to jump in when you have comments, input, feedback, or questions for us. But with that, guys, I'm going to tee it up with a couple facts and things I've seen around the FinTech ecosystem. And I'd like to go around the horn and see what you guys think. On the negative side, we've seen some bad. We've seen some real bad. Companies like MasterCard and Visa have cut their predictions for revenue due to the scare. They're saying that credit cards are unlikely to get used right now to purchase things like flights. So obviously that's a big deal for them. PayPal has confirmed that because of the coronavirus, they've seen a drop in e-commerce activity. That's surprising to me when I saw that.
Yeah, I don't believe that. I get if you said cash was down, because I think, the thought that the virus might live longer on that surface of money, but I would have still, and I get that the overall receipts will be down for Visa, MasterCard, but I still think they're not going to be down as bad as cash is going to be down. Physical cash.
A gut reaction, I'd agree to that. Also, I saw that people are expected to dine out less as they're encouraged by governments to social distance. And that means companies like Square and Stripe, who provide those payment terminals, are going to record losses, less payments. Robo-advisors are seeing a hit, they've said as well. The sector relies on having active activity on the stock market. And Wealthfront, Betterment, companies like that are anticipated to record some hits. But on the positive side and on the opportunity side, we've seen a lot of countries and everyone essentially encourage contactless payment to really prevent the spread of the virus on dollars, on currency. South Korea, where regulations were once considered really strict in the fintech domain, they're easing some of that as we've seen to mitigate that spread. And this was an interesting quote I saw from Nigel Morris, we know, partner at QED Investors. The behaviors that people can execute from their living room or from their den are now going to grow, and behaviors that require face-to-face interaction or getting out into the community are going to diminish. What does that mean? You should have greater mobile apps and digital adoption in general. If I had been holding off on signing up for PayPal, for instance, I might just do that. So the punchline, and I'd love your feedback, is there's a ton of bad news. But if you know where to look, there's an amazing amount of good news, of opportunity, of innovation like I've never seen as this world is changing before our very eyes. What are you guys seeing?
Yeah, I think for me,
I think it's highlighting really the people who were prepared and were not prepared to really use digital to their advantage. I think the people that you're seeing rapidly innovate and react to this are the people who were already really prepared to do it. And sorry, Scott, I know I cut you off, so go ahead.
Go ahead.
I think he's totally wrong, everything he said. No, I think in a lot of ways it's accelerating a lot of things that were already in play, right? Like all the things you mentioned were trends that were happening, or you think about chatbots, you think about contactless, you think about all these things, but they hadn't necessarily gotten the real push to say they're required or that they've got kind of the kick behind them. Now companies are being forced to because they're the way people are interacting. So I think it's a huge kind of kickstart, or at least an accelerant to a lot of trends that were playing out kind of a lot slower anyway.
Aubrey, what are you seeing?
I think it also gets to be a challenge around how do you engage and motivate your workforce. So I think not only is the other ideas, I think there's a huge opportunity that says, how do you use digital technologies to engage your workforce? So whether that's like what we're doing today on Zoom, it is how do you leverage all of the new sort of technologies? And I think like being on Slack and video technologies, I think for a lot of these fintech companies are somewhat second nature. And if you're more of a legacy style company, I think they struggle with how do you adopt and do these tools. And I think this is ways to keep us engaged as we're trying to show kind of doing it this way. So,
Katie, you're the director of innovation and operations, newly hired literally a couple weeks before the entire world changed for the FinTech Hub. You've also been thinking a lot lately about on our innovation front, how the world changes and how that impacts our ability to deliver programs like incubation and acceleration of deal making and just ideation for the new world as it exists, as well as us all being able to figure out how to work productively remotely and do the meetups that we used to do to get human interaction virtually. What are your thoughts? You're on mute, Katie. You're on. Yes, you got to unmute. Welcome to the Mosh Pit.
Hello.
Yes.
First time on the Mosh Pit. Had to unmute myself.
welcome.
Thank you. No, but I think one of the biggest challenges is, I think I've discussed with you before, is trying to basically replicate that in-person connection when you meet people and you make deals. And so how do we kind of foster, how do we leverage technology? How do we leverage things like Zoom and like these meetups to kind of capture that and foster more of an innovative environment, an accelerator more digitally? And that's kind of where my head's at right now, just trying to figure that out, talk to as many people. So that's kind of what I'm thinking.
It's a challenge. We can't even figure out how to get Aubrey to click mute when he's not talking. I mean, it's impossible to figure out. Like,
I'm gonna mute myself now.
Yeah, he's gonna put like cotton swabs on
Typing on that loud keyboard.
So let's jump into the topics now, guys. Again, please share any comments, questions, input you have. Pasha's looking at that, and our producer Brian is actively looking for visuals and charts and things that might be relevant for us. Let's jump right into Square. Aubrey, there's been a lot of interesting news, particularly the March 18th Square press release where they received conditional FDIC approval for an industrial loan charter, an ILC application for deposit insurance. This is a topic that we've kept our eye on for a long time. What does this new time, this new era we're in, mean for angles like that and companies like Square?
Well, I think it's interesting. If you look at Square, they had a recent announcement back in March where they're cutting their revenue guidance. It looks like they're tailoring it back slightly. It's not a major cut. I think primarily, as most folks here that listen to the Moshpit are aware, is Square is they accept payments primarily supporting small business and individual businesses. Awesome. Thank you for the great graphics there,
Way
Brian.
to go. Dude, you're basically the Joe Rogan assistant of the Fintech Moshpit. This is amazing.
Yeah, this is perfect. But I think what you look at is I think there's been lots of non-bank sort of players looking at trying to get an ILC charter to go back and to support deposits. And I think this is where Square's been in looking at saying, how do they go back and establish lending to their customer base? But with this announcement, they're going to get an FDIC charter, which will allow them to go back and take deposits. I think the question mark in my mind is this to really further their business around what they're doing with small business, which will be interesting to see the impact of that. And certainly, I know a lot of us, because I follow a lot of you guys on social, we're all out there trying to support our favorite small businesses in the region. But I do think that Square, you can see that Square is going to get hit by this. But I think Square was also one of those early innovators looking at supporting, push money movements through the debit rails. So I think there's there's more to this story around what Square is going to do once they get the charter. Any other thoughts, guys?
Yeah, I think for me, the easy play is lower cost of capital, right? Like cheaper access to funds for lending. That makes sense based on their lending business, and that's kind of a no-brainer. I think probably the more interesting part that you allude to is if they start leveraging kind of their technology chops and then that bank license to offer more services for other fintechs, right? I mean, that's the play that I think they certainly have the right mindset for. They've got, products in the space that leverage components of partner bank licenses to be able to take that and pivot it and start offering that to other fintechs. That's the real opportunity in my mind that fits kind of what seems like their ethos, but they haven't really kind of showed those cards quite yet.
I wonder too, well, do you think this will open up, I don't want to say floodgates, but do you think this will help enable others that are working on getting charters like Rakuten, which is a large Japanese e-commerce player, that's also, I know, sitting in the hopper. And I just wonder if this is the first of a few of these announcements like this to come.
Yeah, it's a good question, right? Is this posture from the government now going to be let more of these through and have, alternative players in the market? Or is it double down on securing the existing players and maintaining control or maintaining the order that exists in the system? I don't know. That's a good question.
So Varo Money also was, they were the first, and then Square was the second to gain this approval. And they got it in February. And then I'm seeing in the same month, Lending Club, a trailblazer in online lending, announced its first fintech acquisition, spending $185 million in cash stock to acquire Radius Bank Corp. You know, I guess my question is, so clearly this is something, and I try to check myself every time a new topic comes up in the last couple of weeks, which is this was something hot, something we were all nerding out and paying attention to for months and months, if not years, and how this space was going to evolve. How has the world changed? And particularly, is there not just an element of opportunistic attack because there's market space to be had, but does the world need this kind of move more aggressively now? And I pose that question as it relates to the essentially frozen credit markets on the supply side that particularly our small businesses and folks who are trying to get deals done and expand and stay in business are seeing. Is this a solution for that?
I think it's part of the solution for sure. If you think about the data that Square has on their small business merchants and their ability to use technology to their advantage in a way that a lot of their competitors, especially the more legacy competitors, can't or won't, I think that's a huge part of it. I think the other thing is, Aubrey made the comment that, the way that small business goes is the way that that Square may go. And clearly their transaction volume is going to decrease. I don't think there's any doubt about that. But, you look at their last earnings filing at the end of Q4 last year, they were sitting on $2 billion in cash. I don't think that the strategy fundamentally changes just because the world changed dramatically in the last 2 weeks. To me, I think the shape of the opportunity is the same. Maybe the size is a little bit smaller because merchants take a little bit of a hit and some small businesses will inevitably go out of business, but the need is still there. And I think Square is in a unique spot, or at least one of the few companies that's in the spot to be able to do it.
How are the banks going to respond to this? Do you think they're going to view this as a threat or as a needed add to a market on the credit lending side that is frozen and is in its greatest need potentially ever?
I can't see the banks being happy about it. So I don't think that that's the answer. I don't know that Square, if this series of events that has played out over the last couple of weeks, if you fast forwarded to a time when Square had finished all the work that they're going to do for their charter and they had a lending product, I don't think that unfreezes the liquidity that's needed in the space right now. Personally, I think it's helpful to small businesses. I think you can make better risk decisions, but I don't think that magically makes more capital appear in the system.
Let's move on to the next topic, if you don't mind, unless anyone else had something. No,
I was just going to say, I said the only piece would be interesting is there a way, though, as you look at some of the package that has passed Congress, if you go back and use Square as one of those means to go back and access those small businesses, could become a vehicle to inject liquidity into that. And maybe that could be a part of the angle around why they're getting approval. Now I know that's kind of going out on a limb, but that could be part of it.
If you look at these bills and you look at TALF, which they've reenacted from the financial crisis, and the SBA 7A stuff, I mean, you'd think there's a connection for sure. Chris, why don't you take us into digital dollar there and what's going on in that news?
Yeah, so, obviously things are changing quickly. So the news on the 23rd was that some of the at least one of the proposed bills to provide stimulus for this crisis included the idea of a digital dollar. And this wasn't really well defined in the language that existed at the time, but the idea was basically that the Federal Reserve would use a digital dollar in digital wallets that they operated on qualified individuals' behalves to be able to send payments digitally. And they talked a little bit in the language about keeping the balance expressed as a dollar value and this idea of a digital ledger. Obviously no detail around the implementation. And like I said, things are changing quickly. By the 24th, they had removed the language. I don't think it's in the language that was passed earlier this morning. So we'll see how it plays out. But I think the interesting thing to take away from it is you think about the conversations that were being had 3 or 4 months ago around Libra and how resistant people were to the idea of a digital currency. And all of a sudden you fast forward and you go through this crisis, and now all of a sudden people are seriously proposing it, obviously in a very different form. I do think that it speaks to the evolution of the idea of a digital currency. And I think it also just highlights the fact that digital currency isn't as crazy as it sounds. It's not like there's money, physical cash moving in and out of different vaults when banks are settling up at the end of every night with the Fed. I think this is more possible than we probably originally thought anyway.
Scott, you hate everything. Why do you hate this?
I don't hate everything. I love tacos. So I guess to me, I don't get the point, right? Like, so the way I read it is essentially it's a Fed bank account for every individual that banks and others have to then build an actual experience on top of to interact with. Right. So it's like you can call it a digital dollar, but to Chris's point, I mean, money exists in ledgers that are all digital today anyway. All it's doing is assigning it like in an individual level, with the idea that in theory, then every American would be able to have access to this currency, if you will. But then everybody's got to go build a way to access to it, whether that's, through ATMs or through some user experience online or whatever. So it doesn't feel to me like it necessarily adds any additional value. It doesn't like make people that are unbanked suddenly banked. Like someone still has to provide the service to access it. Someone has to pay for that. If it's to move it to a federally funded bank account, like, okay, that's fine, but that's what it is, right? So to me, the start premise is like, we need to be able to distribute money better, faster. Okay. But then the result of that being like, well, we're just going to say it's in these ledgers and we're going to create them at an individual level. And then everybody else go figure out how to distribute that. I think the idea of it is nice. Some version of that, maybe someday we get to, but as a solution for this particular need, it feels like that's way too much complexity and way too much unknown for a time when people just want to know they're going to get the money in the mail if that's what the government's doing.
I think probably the point that Scott just made is the most practical criticism of it in the short term. Had it gone forward, how quickly could anything like this be built? I mean, you look at even some simpler things that have had to be done using the banking system, and it takes years. And we've been working on trying to make ACH faster. That took a decade from the time that people first started thinking about it. So I do think that that's probably the most immediate criticism that I would agree with.
Is there any value today in what we're experiencing, why this is more important to do this or something like this than a month or two ago when the world was a different place?
Yeah, I think absolutely. I think it's the need to disperse presumably a lot of money to every individual American in a way that is as efficient as possible, and kind of the realization that there's not a system to do that today. So the government can use RTP for banks that leverages real-time payments. They can use ACH for direct disbursement for a wide swath of Americans. But everybody else, they're going to have to cut checks, and that's both really expensive and really slow. And if I need money today to go buy groceries, that's a horrible answer, because by the time I get that check and I'm able to cash it, I'm a week later, right? So I think it highlighted, today's environment has highlighted the need for the ability to quickly distribute funds. But how often is the government distributing large amounts of money like this? Which is why I think it's yeah, hopefully not very often
They're
for
about
this type of scenario.
Yeah, about to, for sure.
But if you think of tax payments, right? I mean, that's the other big use case where the government is distributing money to many individuals, and this could have relevance beyond just this one-time event. So I think that's why the idea doesn't go away, but it doesn't feel like a solution to the current need.
Scott, why don't you transition over and tell us a little bit about Akoya and what's going on there?
Yeah, absolutely. So Akoya is a company that was spun out of, was it Fidelity that was spun out of? That a number of the banks and other entities went in and essentially bought. This was roughly a month after the Visa Plaid acquisition. So, Visa bought Plaid, Plaid, major player that is invisible to a lot of people, but it's ultimately what is enabling a lot of the fintech experiences where you're able to connect your bank account to everything from Venmo to Robinhood to a bunch of other services. Visa buying Plaid was interesting because it kind of divides the world into two kind of sets of entities in my mind. One is the small mid-tier banks that Visa provides a lot of services for today. So for them, it's fantastic, right? There's no way the small credit union or billion-dollar bank was going to be able to build an API strategy to share their bank data. Visa can now offer that to them and through Plaid and Plaid products. The big banks, on the other hand, it's a whole different relationship, right? I mean, they're trying to actively figure out how to manage their exposure of data in a way they can control. And I think the Akoya acquisition / however you want to frame that is essentially the answer to that for a lot of those banks. It's, Visa will do what Visa does with Plaid. They're a partner with us, and we'll continue to find a way to make that work. But we also want control over how this gets done and implemented. So we want something else in the market that's under more of our control. And Akoya gives them that answer. So I think it's super early in that space to see exactly how that will play. But I think the reaction to that, especially within the banking community, is very polarizing depending on how much you're both able to and desire to control your own sort of set of services versus how much you really need someone like Visa or MasterCard or whoever to do that for you.
Well, I think that's partly why you see banks a lot of times having at least one or two alternatives to any one of these capabilities. I think part of the optionality that they want is really to hedge and provide a way to maybe direct the outcome of some of those partnerships in a way that's a little more subtle.
I think this is some potential game changing for how this market is and will exist in the future. But again, I'm just putting an eye towards the Visa to acquire Plaid news, January 13th. Like that seems like a different universe ago. I remember looking at that story like, oh, that's like, I thought Visa and MasterCard were about to die a slow death at some point. And this is, I knew something like this was coming, but now, like with everything, I asked the question, what does this do? How does this help the current situation we're in and the new world trajectory that we're heading towards? So, it's interesting. So let's go around. Any final thoughts? Any final thoughts on the Fintech Moshpit being back? Any final thoughts on Fintech and the new world and COVID-19 land that we're in social distancing world?
I'm looking forward to being able to do this with all of you guys and like within 6 feet of me.
Indeed. That should be a long time. We got to get back to the tradition of we never do the mosh pit without all cracking a beer. Maybe we'll do it later in the day, so we can get more work done right now.
Yeah, I think the final thought for me is I do think this is a period of kind of make or break for a lot of organizations. Ones that lean in heavy to tech and had already been doing that are going to stand a much better chance of coming out the other side strong. I think ones that have been delaying that are going to have a harder time investing in it now and really making sure that they can make it work for them. So it'll be interesting times, but I think it's going to kind of separate those two kind of groups of companies, mainly aligned to how deep they've invested in technology from a culture perspective more than anything, and how embedded it is.
Truer words were never spoken, Scott. And I've never heard positive sentiments come out of your mouth, so I know that that we must be in trouble right now. So everyone, appreciate you so much as always joining the FinTech Hub Mosh Pit here. The FinTech Moshpit is something that's always been very special to us, and we're just so grateful that we're back, that we're here to join up and fight.
Enter your own risk.
Hells yeah, I'm gonna mosh tonight. In the last 2.5 decades, the mosh pit has evolved.
I don't know, maybe it's been around forever and we're just now calling it the mosh pit, like in the tribal days where they'd like dance around the fire.
For veteran moshers, there's a set of unspoken rules that governs pit behavior.
Mosh pit etiquette.